Hi, I'm Peter Rose, founder of Longwood Currency Trading. Issues of splitting your trade entry into multiple transactions. I'd like to discuss that because some of the folks that I've been talking with about trade entry analysis are confused about some of those issues, and hopefully I can help prevent you from making some drastic mistakes, because you could lose literally thousands and thousands of dollars if you get this particular aspect of the thing wrong, if you're building your position by making multiple transactions. I'm out here, it's a really hot summer day in New England, early September of 2023. The Bo dog and I, where's the Bo? Hey Bo, come on, let's go. There he goes. I'm gonna go out in the woods where it's cool. Bo's having a hard time just laying around. So the issue here is you enter with, again, the assumption here is you're not trading mini lots. Don't do that. Or you're trading half lots or something. Trade full lot positions, and you should have the experience as all-in, all-out trader before you even think about splitting your entry transactions on your position early on. There's two parts to building a position. Number one is that you build the position fairly close to your entry point to break up your risk. If you're trading a 10 lot, for example, you may not want to go all in, all out with a 10 lot, because if you get it wrong and you get a 20 pip stop, you're two grand out. You get that wrong 6 times in a row, that's $12,000. So that's probably not something you want to do unless you had enough bank capability to do, instead of 10 lots, to do 15 or 20, and then maybe the 10 lot as an entry would be okay. You have to balance these sizes of these positions to your bank so that you've got not only protection on the front end so that you don't lose so much in relationship to what you're going to win when you do win, and you want to have plenty of dry powder left in your account for the positions that go into become a runner, and then you want to be adding aggressively to that position. You got to have more, more money to put more lots into it. So that's the first issue that we're concerned with. You build the position in that early stage, and that's basically what I'm going to be talking about in this video. The second thing that you do when you're doing split trading is that after you've built that position, as I indicated before, and you get a runner and you want to add to that, that's called staging. So that you stage into the position after you have your initial position already established, and you're running that position in profit. You don't stage if you're not in profit. That's a rule that I have. I don't know, you do whatever you want to do. But when you're looking at building a position, you have to look at the, and again, I'm talking about day trading, and we're doing all of our example work on the 5-minute chart on a major pair with an ATR of about 5, just to give you some references to the metrics that I'm talking about. And, you know, maybe you've got a, I don't know, a 5 lot that you're going to be working with. I mean, that's just an arbitrary number. Looking at doing this kind of stuff, a lot of it's skill-based, a lot of it is your win-to-loss ratio, your knowledge of how much you make when you win as opposed to what your loss is. And there's a consistency factor that's involved in there as well. I guess the Bo wants to go up this way through the woods. Okay. So I'm just going to throw lot sizes out there because it's the process I'm trying to describe. I'm not giving you a rule or how you should do it with your bank. I don't know what your bank is, and you may be listening to this video and you're still trading a 1 or 2 lot or 3 lot or something like that, or minis, and as far as I'm concerned, this is not something that you should be doing. That's just my opinion. Again, that's why I don't have very many subscribers on my channel, because most folks don't like to hear this stuff. They'd rather watch some guy driving around with his Lambo and making $12,000 because he's trading at 200 to 1. Terrific. You're not going to be able to do that. but you'll have to learn that the hard way. But I digress. If you're going to build a position with multiple, like you do an entry and then you build another one and then maybe you build another one, which you don't want to do. If you're going to build a position, you have to take into consideration how far away your profit target is. If your profit target, if you're doing day trading, and again, you got to learn this stuff as a day trader. Oh, come on down here. Oh, yo, come on, come on, come on, come on. If you're trying to do this as a long-term trader, this stuff changes a little bit, and I'm not going to go into that because I don't think currency should be traded long-term, and there's a lot of reasons for that. That's why I'm a day trader. I want to trade on a daily basis. You know, I got up this morning and I made $1,100 in 15 minutes. I'm done. That's why I'm walking around in the woods. So when you are thinking about breaking your position, your entry position into different transactions, you have to look at, well, how much room do I have to put those transactions in there? If you're a day trader, how many pips can you possibly expect to get when the price is running and you're trying to get your trade done within 2 hours so you can get to work? You think you're going to set that as a set and forget and let it run happily on? You're lucky that the thing gets to 15 or 20 pips without a retracement. And how long do you think it's going to get there? If you're looking at 15 pips, that's 3 5-minute bars. So you get 15 minutes that it would take you 25, 30 minutes. It might take you 30 minutes waiting to get an entry signal to go. So now you're an hour into it, and then you're going to sit there and manage that trade. You can get all this done in an hour, and if you get yourself 2 hours, that gives you some buffer room, just like you'd have runway money over and above your margin, right? So what's your expectation as a day trader trading on a 5-minute chart with a 5-period ATR? How far is that price going to run before you're going to get a retracement? Well, it's probably, unless you're in a blow-off or something, or you're trading an NFP or something, you're not going to get that to run 40 pips or something for the day. I've been in situations where the trading bars on a 1-minute bar has gone 60 pips. That's true. But you don't trade on a daily basis expecting to get a 60 pip 1-minute bar, or a 60 pip 5-minute bar, or a 60 pip 15-minute bar. It's not gonna be consistent, so that you learn consistency in your trading. You have rules that plan for that, but you don't trade for that and wait for that to happen, because you'll be sitting there waiting for a long time. In any event, how many pips is reasonable for that price to move? 20 to 30. You're probably not going to get more than 20, but unless you're going to be in a runner. But the place where you set your profit target is the place that you don't think price will go beyond. That's why it's called a profit target. It's not that you're automatically going to pull off your trade at the end of that profit target. I do, because I set that profit target. I have a really good win-to-loss ratio. I set that profit target, and because I'm trading with a lot of size, that profit target is, it could be a couple of $1,000 or whatever. One trade, boom, gone. And I'm out of there in 20 minutes or an hour. So, and there are days where I'll lose $2,000. But in the aggregate, you're looking at, well, what's possible for price to do? I had to call Bo again because he's trading to a different currency pair than I am. We're wandering around the woods here. He doesn't really like to go this far because he doesn't know where Sue is. Sue is off with her brother today, and so he's with me. I'm not sure he wants to be with me. In any event, let's just say that you'll buy into the premise that you'll be lucky if price moves 20 pips. And so you set your profit target 20, 30 pips, wherever that is. That somewhere in that 15 pip range, you have to start looking for a pullback. So what are you going to do? You're going to put one lot in at entry or two lots in at entry, and then you're going to wait for 20 pips, and then you're going to put the other one in. You can't do that. I've done a lot of analysis and math on this stuff, and I've been studying the currency market since 2007, and so I've got those distances down pretty well as to where the proportions and the things are. So those that I consult with or take a course, that's all built into that process. How do you do this? How do you build a position? What are the distances that the position should be in, and where's the stop, and how do you manage your average position value so that you don't have a slight puke in the price? And not only does it take out your second build point, but it also takes out, for negative value, your original build point. And so now you find yourself 15 pips into a profitable trade, you get a puke, and all of a sudden now you lose 10 pips on your the last build point that you put in, and you lose maybe another 5 pips on the original entry position that you put on. That's what you want to try to avoid. So you have to work through that and say, well, what size bank do I have? What am I comfortable with on the time frame that I'm trading as to where to set that profit target? I want to leave myself enough dry powder that if it does get to the profit target, that I can then start to stage in. Another rule that I have is I don't start staging until I've gone beyond the profit target. Why would you do that? Why would you put yourself in a position where you have lots going in and that price may turn around and go totally against you and whack you? Even if you put one lot in, it's 10 bucks a pip. I mean, you go 10 pips, you lost $100. And I don't know how far you went with that or how many lots you started with, but you can't, if you get that wrong, that $100 loss could come into a $400 loss. Just boom, if you get your pacing wrong on the implementation of that. So that's why I say that the main issue in breaking your entry position up is you have an entry trade that you make. I call that build level 1. And then I have a second build. After that, the thing runs clear, because I needed to get far enough beyond that second build point such that the average position value is way far away from where my current price is. And in that way, I can take more and more of a downturn in the price and still end up making a sufficient amount of money on the trade, even though I've lost quite a bit because I've position I stop that out, pull the plug on it, and I make a few pips or whatever I'm going to make. And that's another calculation that you need to learn how to make. What's a sufficient amount of money to make? Is it based on the amount of your bank? Is it based on what your risk level is? Is it a set static amount that you'd like to make? How do you ensure yourself in making that? By how do you stage those lots in as you build those two positions? I used the wrong term, staging. You're building the position, and you only have a couple of those, so that if all you do is get close to the profit target, both of those build transactions are in profit to a, let's hope, significant degree, because you have entered each position, or entered that second transaction, that second lot thing that you've done, in the appropriate size and the appropriate distance, so that when price gets to a terminal point, not the profit target, but it starts to, what I say, chatter. The price starts to chatter. It's losing momentum. you hit the close all button, boom, and you're done, and you've made sufficient money for the day based on that effort. You're only going to get a runner maybe 1 in 5. Maybe, yeah, 1 in 5. I don't really look at the runners because I have certain criteria that need to be manifest early when I'm taking the trade, and my profit targets are generally close enough such that if you're going to build up the momentum for that price to continue on beyond where your profit target is, it's only doing that in the latter stages. If my profit target, for example, is 20 pips and I get to the 15 pip level and I start seeing a little chatter or whatever, or even if it goes to the 20 pip level, I'm out. I go out, because my entry analysis didn't indicate to me that there was the probability that price would run beyond the profit target. I was in a trade earlier today where I was in that exact same situation, and I let it run, and it flipped around and it came back up, and I said, well, it hadn't gone very far, so let's see what's going to happen here. I ended up pulling the plug on it, and I lost $250 or something like that. And that the way I was able to pull the trigger on that is because I knew what my expectation was. It wasn't going to run to a profit target level. It was never intended to get there. I was only looking for about 5 pips or 6 pips or something like that on the profit target. It was a quick take. I did that yesterday and made $500 on a quick take like that. I loaded up, I think it was an 8-lot position, wrote it down, boom, gone. And I made $400. So I wasn't loaded up that heavy because I didn't have that much confidence in the price. I was a little early in taking the position to start with, but my profit reachable point was so close to where I was going in that I thought, well, I'll just go in light and I'll just do a quick hop and I'll get, a few $100s out of it, and that's great because I already made $1,000, so I thought I'd get that few $100s out. So those are all considerations that you're going to have to make in order to decide if you've got the skill level to break your position up into segments, into individual transactions. So again, if you had that 5 lots, your decision is, do I go all in and come all out, 5 and 5? Do I open with 1 and add 2 and then add 2 on top of that? Do I open with 3 and add 1? Do I open with 3 and add 2 and then 1 at the stage? Or am I going to try 2 build level transactions and then save the rest in case there's a runner? When you don't have much money in your account, that you can only trade a certain number of lots, that limits you in what you're able to do in the beginning, and saving enough dry powder so that if it does make a runner beyond that, you've got the juice to load in there. Because remember, when you load that stuff in there, after it's gone past your profit target, you're bringing that average position cost way up. I mean, if you've gone in there with 3 or 4 lots and all you've got is 2 or 3 left, and you go blowing past there and you add 2 or 3 more lots, that average position value now comes up 50%, or half the distance between where it was before and where the current price is now. How many pips is that? It could be enough pips that a small burp, like I said, is going to take you down. You need to really think about that and consider all of these issues before you start deciding that you've got the skill or the money in order to make multiple transactions up on the deck here, in order to make multiple transactions without getting jammed up and getting lost in things. there's a lot of times when I'll look at that price, and I always build and save a lot of dry powder to stage. But there's a lot of times where I'll say, I'm not really sure about this market, and I'm not really sure about how much time I'm going to be here. So I'll just come in with 3 lots, and I'll come out with 3 lots, unless this thing really matures into the trade, and I go, wow, this is really good. I'll pop another 3, and we'll see what happens. But the danger, again, is that brings your average position value up, and you have to be really cognizant of that. You can't all of a sudden say, oh, well, this thing is going to go 28 pips. And you're down at the 15 pip level, and now you double up, and it goes to 18 pips, and then you take a 10 pip hit, and you're underwater on both of those entry build transactions. I hope that was helpful for you. If not, and leave a comment. Let me know if this was helpful for you. If you haven't subscribed to the channel, subscribe to the channel. But if you have any questions on that, or you've experienced that on your own, send me an email. I'll be happy to chat with you about it. Peter Rose, Longwood Currency Trading. Have a great day, and have a great trading day.